Hello everyone, my name is Ryan Banks, and today you will learn exactly how to do your own tax planning so that you can minimize the amount of taxes that you owe this year. So in other terms, I'm going to be sharing with you different tax saving tips and tricks that you can bank on. Before I start the video, I just want to mention that I won't be covering anything that pertains to any business income towards your personal taxes. And I assume that you have a general understanding of what the tax bracket system is in Canada, and that you have a general understanding of a TFSA and also an RRSP. But if you need a quick refresher, you can definitely click these videos right here in the description of this video. And also, before you do any changes or any tax planning, I definitely would suggest for you to contact your accountant or financial advisor before making any changes. Now, when it comes to my own tax planning, the first thing I like to do is look at my last pay stub of the previous year, because it gives me a rough estimate of the amount of money that I've made and all the deductions that I paid towards. So this includes the income taxes withheld each year, CPP, EI, and if I did some retirement or RRSP contributions through work with a matching program. So to be able to calculate the amount of taxes or the rough estimate of the taxes that I'm going to be paying for this upcoming tax season, here are the two following ways that you can do it. Now, the easiest way for you to do it is opening up a brand new tax return, which means if you bought a software last year or if you just bought a brand new software this year, create a blank return and quickly enter all of the basic information for you, and make sure that you add the section where if you have employment income so that you can enter information for a T4. Then once you get to that section, you can enter all the information that you see on the last pay stub of the previous year so that you can get a rough estimate. And the reason why I like doing this in a tax return is because it will include all of the tax credits, and it will give you a pretty good rough estimate if you've got a refund or if you got taxes owing for this year. Now, once you know your rough estimate of if you have taxes owing or a refund for this upcoming year, now this is where it comes fun, and that's when you do your own tax planning, is considering if you should do some RRSP contributions. So in that whole checklist, if you add RRSP contributions, then you can play around and enter different amounts of RRSP contributions, and you'll see how it fluctuates for a lower amount of your taxes owing or a bigger refund. So when it comes to RRSPs, it's a lot more advantageous or get more benefit out of your RRSP contributions if you're in a higher tax bracket, because it lowers your taxable income, and when your income is taxed at a higher amount, those RRSP contributions definitely help you a lot more. Now, the second way that you can do your own tax planning is when you Google tax calculator, then add your province or territory, then which year you want to do your tax planning. Then you're going to see a bunch of different websites, and you can pick any one that you want, but the ones that I like to use is either TurboTax or Wealthsimple, but any of those websites are good and they're pretty close and similar. So when you do click on that website, you're going to see that you can enter all of the different types of incomes that you have, which includes your employment income, investment income, and etc. And also add your RRSP contributions. Then when you add all of those amounts and you press calculate, don't be alarmed, because it's going to show you that you have a big amount of taxes owing. And that's fine, because this doesn't include the income taxes withheld that directly offsets the amount of taxes that you owe, which you can see on your pay stub. And it also doesn't include all of the refundable and non-refundable credits that also help you reduce that income, and it also doesn't include any other deductions that you add on the tax return. So this second way is a little bit more difficult for you to exactly know what it is unless you know exactly how to calculate all those things. As I previously mentioned, RRSPs can definitely help you lower that taxable income, so it can lower the amount of taxes that you owe. One thing to also consider is if you have a lot lower income this year and you plan to have a lot more income next year, then one thing to potentially consider is waiting to use those RRSP contributions this year and put them towards next year. But this is definitely something you should talk to your accountant about, but it's definitely one thing that you should keep in mind. Also remember, you have 60 days after January 1st to contribute to RRSPs. So in most years, it's March 1st. So make sure you do those contributions before then. Now, one mistake that I've seen in the past is if you're someone who gets a bonus at the end of the year, make sure that there are some income taxes deducted so you don't get whacked with a bunch of taxes owing at the end of the year. Or if you don't get any taxes withheld, then make sure you do some RRSP contributions so you can help offset those taxes owing. Now, if you have room in your tax-free savings account and your RRSPs, and you also have current investments in non-registered accounts that you get taxed on every type of investment income that you have, then potentially consider transferring those non-registered investments into tax shelter accounts like your tax-free savings or your RRSPs. But one thing to remember is when you do transfer those, remember that the transfer amount is at the fair market value that you transfer those investments at that current day. So let's say you've invested $2,000 and went up to $3,000 into a non-registered account. Then when you transfer those, it's going to consider like you sold those amounts. And that means you're going to get taxed that year, but any future income that you get won't be taxed because it's either going to be in your tax-free savings account or your RRSPs. So definitely consider doing that because those tax shelters accounts definitely helps you as an individual to pay lower taxes or wait to pay taxes in the future. Tax planning can be very useful and it only takes about 10 minutes to do. By just taking that little 10 minutes, it can prevent big surprises of a big amount owing. And if you do see a big amount owing, then you can start planning on how you're going to pay for it, or you can make contributions to potentially lower that amount owing. So there are a few different things that you can do that can help you prevent those big surprises. So if you have any questions for me, you can definitely write a comment or you can email me at ryanbankscpa@gmail.com. So I just want to thank you for watching the video and I hope you have a great day.